This Beef Market Update podcast is brought to you by Brett Young. You treat them like family, feed them like family. Talk to your retailer about Brett Young's forage and corn options for a happy, healthy herd or visit brettyoung.ca.
It's now time here on Real Agriculture for the Beef Market Update with Wasko, the Gateway Livestock Exchange, and it is great to chat with you.
It's good to be here, Sean.
So, I don't even know where to begin. I guess, how would you describe 2025? Is it just kind of volatility, chaos, uncertainty? Is that kind of what sort of fills the... Yeah, it is. Okay.
Yep. It sure does. It sure does. You know, whether it's been hour to hour, day to day, week to week. But kind of all over the map. And of course, the markets are responding as they go through the news. So, you know, just for example, cash markets, you know, in the US last week bounced back nicely. And this week held on to it. So for example, in the South, in Kansas, this week we were up $3 to $2 even. So if you remember, the markets had rallied, then saddled back, and now they've kind of rallied back up again. In the North, not a whole bunch of trade this week in the Nebraska, Iowa areas, but there was a little bit at 204. So that'll be a couple bucks higher than last week. So certainly holding the gains from last week. You know, if you're watching the futures markets, you know, talking about volatility, looking at going back 10 days ago, April live cattle futures have rallied basically pretty much close to $2, up to $2 over 202, up $10 in 10 days, you know, and after a big hit prior to that. So, and feeder cattle futures this week making new contract highs. So it has been erratic, to say the least.
What about the cash prices in Canada?
Well, last week, the market started off really tepid. Bids were not good at all. And then by the end of the week, when things looked a little bit better, we saw 450 delivered dressed. And that's what the price was again this week. So 450 delivered dressed. Canfax average last week came out at 265 in Alberta for fat cattle. And so will be similar to that again this week. The one comment I did want to make on the wholesale price, because it is following along with this. And so we did see a $6.50 jump in the choice cutout this week. So the markets are, you know, they're in step with what's going on. So we closed just shy of 320 on the choice cutout last night. So, you know, 10 days ago, it sure didn't look like this, but the markets have recovered. As for now, they feel okay, but you know, who knows what the next turn brings.
And if you're listening to this and you're not in the beef business, you're probably like, hey, what's all the uncertainty and the chaos? Prices are strong. Producers are making money on the cow-calf side as well as the feed yard. So what's the problem? And my answer to that has been the integrated supply chain and just how connected all three countries are and how much under threat that is right now. That's where the uncertainty lies.
Absolutely. And just because that business is day to day, anytime you throw an uncertainty or a, you know, potentially extra cost or anything into that, then the whole markets react right from one end to the other. So good point. The one thing I also want to make in terms of the Alberta fed cattle marketings, and we've seen this really, you know, over the past 8 weeks basically, is pretty active selling. So again, when cattle feeders are feeling confident about something, you know, and they think they've got some leverage, you know, they'll maybe hold cattle, make cattle bigger. That was something we talked about a lot in 2024. That's not the case here in 2025. Cattle feeders have been very aggressively. Well, for that matter, Sean, everyone in the chain has been selling pretty aggressively. So even those that have grass cattle to sell have been selling ahead of schedule. So we are seeing cattle feeders staying very current in Canada as they continue to sell very aggressively on the fat cattle market.
Let's talk about feeder imports and exports and that activity, because there's an example of the integration.
And I think that, you know, as I made the notes for today's call, I you know, just reminded me again just how confusing it must be for even those of us to see it all the time. So, for example, in this case, we just got from StatsCan our January feeder imports from the U.S. into Canada. And we did see 22,000 head of feeder cattle come north in the month of January. That's up 29% from last year. And again, so that is what it is. We do have preliminary export data for January and February for feeder cattle, and we're at 33,000 head heading south.
Oh,
So again, and that is up. So last year in the same 2 months, we would have exported about 12,000 head of feeder cattle. And again, it goes by what's happening to the market on a day-to-day basis. So again, as I mentioned on fat cattle, we've seen lots of exports. Same thing on feeder cattle, but also feeder cattle moving north. So again, some of these deals would have been done long in advance. Some are the nature of the day or the week, and so you see lots of different things going on. Also beef. So that was, we were talking about feeder cattle there just in those comments. We did get some data, February beef imports coming into Canada up 27%. Not a big surprise if you remember 2024 was up as well. North American has a very strong lean trim market right now. Think cow beef in your head. And so we were attracting product from Australia and New Zealand. And that's the case again. We even saw imports from the US up 17%. So again, things flow back and forth depending on the product, the cut, the day, the price, Canadian dollar, whatever it might be. So that's the story there. We did get January beef exports. We're down 1%, but it was interesting to see. And again, 1 month doesn't tell us a lot, but it's interesting just to see in January, we did ship 28% more beef to Japan. And we saw big increases both in South Korea and Hong Kong compared to January of 2024. So that's the kind of data we'll be watching. But it has been erratic as it's watching what's going on in the markets.
yeah. Again, like you mentioned on the feeder cattle side, and when you look at beef imports and exports, this idea that, because what I've heard from some of the audience at Real Agriculture is because of the challenges right now between Canada and the U.S., people have said, "Hey, wait a minute here. Let's just forget about the U.S. market and let's just find other markets for our products. If they don't want our products, somebody else will." And some of the data you shared here, that's a little easier said than done. One, because of the size of the U.S. market, it's the number one economy in the world. Transportation, logistics, it's adjacent to Canada. That's another fact. And trade with China not so great right now either, especially on the pork and canola side. We're very export focused as a country, but we also require, because of the product types, we require imports as well, right? And I want you to just maybe give us the why again. I know you hit on it very briefly, but just hit on the why of that again.
So certainly on the import side, Canada has been for many, many years short needing lean trim, manufacturing beef. In a nutshell, Canadians eat more hamburgers or hamburger type beef than we produce. And even through a sell-off of the cow herd, that's been true. So we're in need, and of course, you want to supply customers with beef. If they want to eat beef, then certainly we'll import it. And so that's always been a part of our marketplace. And then, of course, filling in other spots in terms of in central and eastern Canada, big part of our population. Again, at times, Western Canada can't always supply all of the beef that needs to. Of certain cuts, high-end cuts that need to happen there. So we will import those from the U.S. So again, it really depends on the market, on the day, but we are traditionally short of hamburger-type beef in Canada year in and year out.
When we look at our January results of the Canadian Farmer Sentiment Index, we're going to have new data for April here in about a month. But when you look at how producers feel about their current farm financial performance and their future farm financial performance, there is a big difference between people in the cropping sector versus people that are in the livestock sector. And when you look at people in the beef sector, they feel even better about their current farm financial performance. We definitely have that separation going on right now when you look across the board, different types of farms.
And that makes sense when you think about where we are in this cattle cycle, right? In terms of where the cow-calf producer is and the tighter supplies that we're seeing for in terms of calf prices, feeder cattle prices, those things. So folks are feeling good about the money that's been made, and that's what still looks like is on the table ahead, barring thickening at the border.
Yeah. Canadian dollar, 60, just mid 69s. And I guess here we sit. I honestly, as a, avid currency watcher, I've been kind of surprised how the Canadian dollar has hung in there with all this uncertainty from a trade perspective for Canada, China, and the U.S.
Yeah, and in the midst of interest rate cuts, right? So usually we would have seen, and we saw a little bit of that happen, but it rallied right back. And
Another
so
good point.
I think
Yeah.
many are looking at that, that usually when you see that interest spread starts to happen, that the Canadian dollar weakens. So again, that will be an interesting one for us to continue to watch. But again, remember, because we're an export nation, when we're selling into Japan or South Korea or the US, the weaker Canadian dollar, the lower exchange rate means it's good value for Canadian beef.
I was thinking of, and we'll wrap up with this, and before I let you go, I heard Premier Mo yesterday talk about how, China has put retaliatory tariffs on Canadian canola meal and oil. Premier Mo, in a very passionate speech, yet on Thursday, talked about the fact that these canola crush plants in Saskatchewan, they could be shutting down if we can't export meal and oil to China, as an example. We've also got issues with the U.S. At one time we were looking at expanding canola crush capacity, and now these plants are in real jeopardy. I thought of right away. I thought of some of our U.S. packing plants that are very reliant on Canadian cattle in the PNW, in states like Utah, for example. It's the same kind of discussion. I wonder if we're going to hear more of that narrative as we continue to hear about tariffs on Canadian products.
Yeah, you wonder about that. Of course, remember a lot of those plants are part of obviously big corporate facilities, and so can they shuffle production around the country? So those are the things. But for sure, in terms of individual packing plants, there would be some concern there for sure.
Yeah. Hey, Ann, thanks a lot for joining us here today for the beef market update. Really appreciate it, and we'll chat with you again soon.
Okay, thanks, Sean. Have a good day.
If you want more information on what's going on in the cattle industry and to make sure you don't miss any of these beef market updates, go to realagriculture.com/subscribe and get our weekly cattle email.
Thank you for downloading this episode of the Beef Market Update, brought to you by Brett Young. Check out their silage and grazing corn stock blends or custom build your own mix for a happy, healthy herd. Talk to your retailer, visit brettyoung.ca today.